Good morning, everybody. Happy Tuesday. Hopefully, y'all had a great 3-day weekend. Today is Tuesday, February 21st. The markets are off to a pretty tough start, to say the least. And the big news that's coming out today is World War III, or the possibility of it, with our favorite Putin deciding to scratch the START program, which limited the amount of nuclear testing that could be performed. And he gave a little bit of a warning saying that if the U.S. and the Western allies continue to fund Ukraine, then it could escalate. But so far, it's been all talks. So we'll have to see. Good morning, Waffles. Good morning, Irfan. And the rates today going up on the chance of World War III with, let's see, 10-year Treasury rate currently at 3.9. The 2-year Treasury rate was up about 20 basis points. If we go over to the bond market, the 2-year. Good morning, Kamala. Good morning, Deep in the Money. If we go over to the 2-year, though, this one is up. Well, I bet our loads. $0.67 to almost 4.7% for the 2-year rate. So whenever the 2-year is going up faster than what you're seeing out of the 10-year, that means that there's more risk in the next 2 years compared to the next 10, which kind of coincides with this more nuclear talks. And if we look at the dollar actually hasn't gained that much value. It's still trading at around 104. And on the chance of war increasing, you're going to see more inflows into gold, GLD, than you will see into the dollar index. So if you're looking for a bullish hedge against this potential market crash on nuclear talks, then gold would be your go-to. So I've already got a gold leaps. I might even sell a cover call on it, given how much we pop in the day. Currently it's trading at 171, and I don't think that I want to sell a cover call until we get probably around 173 to 176. So we shall wait on that. In the meantime, I've got a 409, 410 call credit spread for SPY that's expiring today. This one is $6 out of the money, which is about 1.5% for SPY, trading at 400 right now, which means that this one is basically in the bag and don't really have to worry about it. I would imagine that it would probably be trading for less than 10 cents on open. So I might be taking profits whenever the bell rings. Some other interesting things to note before we get started in the next 2 minutes is that we had record inflows from retail traders. Let's see, retail stock buying of an average of $1.5 billion a day into the U.S. markets, according to Vanda Research, which is the most on record. So people were buying up stocks like crazy in January and early February, and usually retail is the one that gets left holding the bag whenever you're in a bear market. So if the bear market continues, then retail traders are going to be in some trouble. What I'm thinking we're going to see probably over the next couple of weeks, I would guess, depending on how the data comes out, but over the next couple of weeks, I think that we could see what's known as a reverse gamma squeeze, where a lot of people start to buy put options. The market makers have to sell shares in order to cover that, which means that you're basically getting pressure on the sell side from people buying up puts. So that could be pretty troublesome over the next couple weeks. Watching the VIX and the rule of 16. Yeah, the VIX is up a crap ton today. 12% as of right now, trading at 2250 almost. So if you divide 2250 by 16, the expected move for today is 1.4% in either direction. SPY has already moved by 0.9%. So on the downside, you might see another 0.5% sell-off, which would lead us down to around 401. We do have some supports below us, currently at 402.46. And then the bottom of the risk range for the week, which I believe was 399.50. And then we have resistance at 406.50, 411.75, and then 415 at the very top of the risk range for this week. Above that, if we do end up, rallying a crap ton this week, you might see 417.23 or the 418.21 Fibonacci level that came from the bottom of March 2020, the pandemic lows, to the bull market highs in January of 2023. Am I bearish for the next couple of weeks? We'll have to see how the data comes out. So we have a lot of economic data, a lot of important economic data that's coming out this week. So that's what we'll have to pay attention to either prove or disprove our thesis for the bears. Economic calendar is what I want, and not economic data. There we go. So for this week, we have PMI coming out in about 12 minutes. The services PMI is what's going to be more important. So this is coming out at 9:45, and everybody is probably going to be paying attention to the services PMI because right now we're seeing very high services inflation. If y'all watch my latest Sunday recap video, let's see, go to Notion and go to my notes. The core services part of the CPI was up 7.2% for the month of January. So we're seeing a lot of services inflation. We are seeing disinflation in goods. So right now we need to reel back that services inflation in order to get rid of inflation overall. So if we see services PMI coming in lower than expected, that would be good for the markets. The markets would react bullish to that because that's a sign that services inflation might tailor off. But if the services PMI comes in higher than expected, that means that services inflation will cool off less than the forecasters are expecting. But looking at this SPY call credit spread, currently up by 72. They're trading at 6 cents a piece. I think I'd be willing to get out of that. I opened just 3 of them, so this will be about $70, $72 in profit. And I want to get out before the PMI, the services PMI comes out. Because again, if that comes in lower than expected, you might see a rally out of SPY. So let me post that over in my trade alerts. Closing options alert. Premium. Just took profits on the 409, 410 SPY call credit spread that expires today, which is the 21st. And I got them for 6 cents. I got out at 6 cents each. I originally picked them up for 30 cents. $409, $410. All right. Originally, well, if I can find the right one to reply to, there we go. Originally got the 3 at 30 each. Okay. out of that position. And if we expect PMI to come in better or lower than expected, that would be bullish for the markets, and we could possibly get some support at 402.46. So that is the next support level down. If you really want to be safer, I guess, I would probably say 400. I would say there's a very low likelihood that we could test the lower end of the risk range this early in the week. It could happen, but the odds of it very slim. So let me check in on a 401 400 put credit spread. All right, so right now these are paying us 17 cents in credit, which is okay. I would prefer if we could get more than 20 cents in credit each. So we could wait until we hit that 402.46 mark. I'm just not sure if we'll reach that in the next 9 minutes before the report comes out. And if we do a 400 $3.99 put credit spread, then we get paid 12 cents in credit. So that one, not worth the risk reward. You get a lot less credit per collateral. So in my opinion, it's a worse off trade. Let me log that trade in, and I'll see if we can wait for this to come a little bit lower to get more credit out of the put credit spread, assuming that services PMI will come in lower than expectations. So if we go to the February log, call credit spread that I opened on 2/16. No, I haven't logged it. Let's see. Friday was calendar. The 17th. 2/17. SPY call credit, which is a bearish / neutral trade. Expiration date was today. I opened the 410 long, 409 for short, 409, not 406. 3 of them at 30 credit each, and then 0.06 is what I closed them at, so $72 profit. All right, so that put credit spread now is going for 20 cents. I think that could be worth it. Probably wouldn't put a lot of money into it. Maybe just like 150 or so. So just like 2 of these. We're not going to get a lot of credit for it, obviously, if we open less of them. But we reduce our risk by a lot. Unless, let's see. We reduce our risk by opening less of these trades. Right now, SPY is trading at 403.50. Looks like my charts just shut off, which is not convenient at all. But let me post this over in the trade tab. New options alert. Premium. Just opened a new SPY put credit spread expiring today. So this is a day trade. Today is the 21st. And I got them at 20 each. Okay. So we got about 6 minutes until the report comes out. We'll have to see how this report ends up shaking out. So, main thing to watch today after the nuclear talks this morning is going to be the services PMI. which is the Purchasing Managers Index, and this will give us an idea of where purchasing managers think the services industry is going over the next 12 months. If they think that the services industry is going to be doing well, that would probably lead to higher services inflation, which is what the Fed doesn't want, which means that rates are going to go higher, which means that the stock market is going to come down. Good morning, Cam. Coin earnings play? I don't have any coin earnings plays. The earnings plays that I've got for this week are Moderna, Nvidia, and Walmart. Do I think Coca-Cola stock is recession-proof? If so, what price would I buy? Coca-Cola, I do think, has a lot of earnings leverage because they are a low-price product that people can still afford. Why are my charts just not loading? There we go. I accidentally clicked that off for some reason. But they have a lot of earnings power because they have low-price items that people can still afford. So that means that they can raise the price of their Coca-Cola bottles from $2 a piece to $3 a piece, increase their margins by, 30, 50%. Meanwhile, people are still going to buy Coca-Cola because it's only $1 more. Until people start refusing to pay $3 for a Coca-Cola bottle, since it used to be $2 or less, right? But considering that the consumer still has a shit ton of money to spend in the stock market of inflows of $1.5 billion a day in retail trading, I think that people can still afford a $3 Coca-Cola. So yeah, I do think that Coca-Cola is recession-proof. And yeah, I think 59 would be a good price. I have 59.20 as the next support level. If we look at the yearly chart, it is trading relatively high, I would say. So if you really want to get a good deal, I'll probably try to buy it at 58. If you're okay with the, moderate deal, I would say 59 would be a good price. Good morning, Cam. But yeah, coin, not playing coin for earnings. They do have their earnings scheduled for 2/21, which is today after hours, but I haven't followed coin closely enough, and I would imagine that the expectations for coin would be very elevated right now, considering the rise in Bitcoin and crypto over the last 6 weeks, I would say, since basically the beginning of the year. The problem with that is that those transactions with people buying up crypto over the last 6 weeks aren't going to be logged until next quarter when it comes to their earnings. So if you're buying coin on the anticipation that they're going to have a good earnings because crypto did well for the last 6 weeks, you are probably going to miss out because a lot of that earnings is going to be in the first quarter of the year, and this is the fourth quarter report of last year. All right, these SPY put credit spreads currently up by 15%, $6 profits so far, and we're waiting for the PMI report coming out in 1 minute. So we'll pull up the economic calendar again, or we can actually pull it up from here, maybe. Today's Tuesday. PMI. Here we go. There's the link for it. Okay. So, did it get released already? Did I miss the release? Maybe so. No. Oh, it already came out. So this came in at 50.5 versus 47.2 expected. So this is likely to lead to higher services inflation, which renders my SPY put credit spread a bad deal, I would say. But let's check the charts. Initial reaction is down. These are going for 20, so we'll probably break even for the trade, maybe make a little bit of profit. Hopefully the bid-ask spread is going to make that a little bit difficult, but let's try. We got them at 20 each. I'll try to close them at 18 if I can. So just a small $4 profit, but the idea was wrong, so might as well get out while I can. I actually got out at 17 each, so a little bit extra profit than I anticipated. But with that services PMI coming in better than expected, probably going to lead to more services inflation, which will send rates up and stocks down. Closing options alerts. Premium just took profits on the 401, 400 SPY put credit spread that expires today, 221 at 17 each. Okay. And again, reasoning being that services inflation could be coming in higher than expected with the services PMI coming in higher. So this is exactly what I anticipated. The 10-year Treasury rate now jumped to 3.925 when it started at 3.9 this morning. So with rates going up, that is going to negatively impact especially growth, QQQ, tech stocks, and speculative names especially. So if you want to take a short trade, I would probably take it against QQQ. And again, I still believe in the long trade for GLD with rising global tensions. So I still have my Leaps call option for gold that expires in December of 2024, if I remember correctly. But you are probably going to see a pullback in GLD with the rates rising. That's going to send the dollar up. The dollar has an inverse relationship with GLD. So whenever the dollar goes up, gold goes down. Whenever the dollar goes down, gold goes up. And with the dollar going up with the rates, that is negatively impacting gold, which is why you're seeing this small drop so far. Nvidia, surprisingly, is still in the green. I do have an Nvidia put debit spread, assuming that it's going to go all the way down to 290. Sorry, not 290. 190 by the end of the week. That trade I'm not very certain in because of how high it's trading at 215 right now, and given that they have a lot of earnings power thanks to share buybacks and employee stock compensation. So with Nvidia, they're probably going to beat on their earnings per share because they're able to write off employee stock compensation and share buybacks to boost their non-GAAP earnings per share, which is always going to be the headline that you see. You're never going to see GAAP earnings or general accepted accounting practices earnings as the headline. So probably going to get a beat or a meet out of Nvidia for the earnings, but the revenue is going to be the key, I think, because you can't fake revenue. There's no way to fake revenue. Like if your revenues are down, then you can't just do share buybacks and boost them. So I do think that if Nvidia does come out with lower revenue for the fourth quarter, this could probably be headed down to 209. And then if they miss on both the revenue and their earnings, then I could see this going below 203. Thoughts on Lucid earnings call tomorrow? Let's see. This one's trading at $10. Jesus Christ. I remember when I was trading at like 30. Yeah, that's awful. It went from $6 all the way up to, God, it went to $17 just a couple weeks ago. That's insane. That was a huge pump. Not really sure if there's any news that catapulted it that high, that quickly. But The earnings per share is expected to come in at, well, it doesn't say. Let's see. Lucid earnings history is what we would want to see. Actually, no. Earnings whispers is what I want to go to, actually. And Lucid is our stock that we are interested in. The expected earnings per share is negative 39 cents, according to Wall Street, and $302 million in revenue. And if you look at last earnings, it was negative 40-cent earnings per share. The one before that was negative 33-cent earnings per share, negative 5 cents, negative 64 cents. So the next thing that I would do is go over to, let me actually write this down so I'll remember the damn thing. Otherwise, I will not. Lucid expectations. It was negative 39-cent earnings per share, $303 million in revenue. Negative 39 EPS, 303 million in revenue. Jesus Christ, that is abysmal. All right, so that's the expected. And then you want to look at their historical. So Lucid earnings history. I like to use personally marketbeat.com just because they have it in a nice little table that makes it very easy to do the math for me. Kind of wish they would do it in a CSV, which would make my math a whole lot quicker, but haven't figured that one out. 0.4, 0.33. These are all losses, by the way. So negative 0.4, negative 33, negative 5, negative 37, negative 41. That is 1, 2, 3, 4, 5 quarters. And that is the total of their earnings history. They've only been around for 5 quarters. So negative 156 earnings per share. Total since they IPO'd, divided by 5 quarters, they've done an average of negative 31-cent earnings per share. And their revenue started at just $23,000. No, that'd be $230,000. Jesus. All right, so 0.23, 0.26, 4, I guess. No, 26.4. 57.7, 97.34, 195.46. So they've done 377.22 revenue divided by 5 quarters, $75 million in revenue over the last 5 quarters, and Wall Street is expecting them to do $303 million for the latest quarter. It's possible that they could, but I would say that it's unlikely given the headwinds of the rising interest rates and how high priced Lucid's vehicles are. Lucid, I mean, they're selling for what, like $90,000 a piece? So if you're financing that when interest rates are going up 3%, that means that you're paying God knows how much more interest on it. Let's see. Car loan calculator. I think that it's even more than 90,000, but we'll be conservative here. All right, well, let's do just an average 60-month loan. Interest rates on car loans right now, well, if it's used, then you'll get a higher interest rate, but these are new vehicles, so I would probably say 4.5% would be reasonable. Down payment, we'll do the standard 20% down, which would be $15,000-ish. No trade-in value. All right. So you're paying $1,400 versus before. This was probably, sorry about that, 2% interest rate. you're paying $1,300. So about $100 difference between what you're paying now, maybe a little bit less or a little bit more, depending on what interest rate you were getting before and after. But the problem right now is people have less savings available to them. If you look at, let's see, the savings rate for the U.S., that's going down. So people probably aren't going to be able to afford a $1,300 a month vehicle versus previously they might have been able to afford it whenever the economy was doing a lot better. Yeah, that's more than a lot of people's rent, which is absolutely ridiculous. But, I mean, hey, that's the luxury vehicle market for you. People will spend $1,200 on a Mercedes, but then, or $1,200 a month, or like $150,000 on a Mercedes, but then won't even buy a house. Buy a depreciating asset, but not an appreciating asset. People don't exactly make the smartest financial conditions, or financial decisions, I should say. But SPY is coming down, currently trading at 402.70, so that one is a new low. I wish this would work a little bit faster. Would be nice. All right, looks like my charts just froze on me. So I might have to reload us for Thinkorswim. Yep, sure looks like it. Of course, it just loaded. Well, that's convenient. All right. Well, let me reload. Maybe that'll make it run a little bit quicker. In the meantime, while we wait for it to load up, I'll head back to the Robinhood account. I do have some shares of UVixy that ought to be doing pretty well today. I might even sell off part of my stake that I have. Currently have, how many shares? Like 441. I'm thinking about taking 10% off the top. So that would be roughly 40 shares that I'll sell. Well, not $40, 40 shares, which is around $200 that I'll get in cash. Trying to fill a 407, 408 bear call spread. Won't fill any ideas why with a 0 data expiration. It's probably trading for like $0, I would imagine, but let me check on that. Let me post this alert and then I'll check that. SPY. So now I'm down to 400 shares of UVixy. I do have 2 cover calls on it too. So if it does go down, then I make money on that. But let's see. All right. So this would be a sell alert. P1 premium. Just sold 40 shares UVixy at, oops, that is not what I want. What price? $5.45 a share. Still think that the VIX could go much higher. Do think that there could be suppression of the VIX thanks to 0 data expiration options. But I think that eventually maybe the VIX could go probably above like 25, 26. Right now it's at 22. So still a ways to go up. Yeah, I would imagine very low open interest on SPY call credit spreads, assuming that it's going to be under 407. Just because it's $5 away, everybody is pretty bearish today, considering the poll is at 78% bearish. So I don't think many people are going to be buying these options. So right now the total credit that you're going to get out of it is around 5 cents. And you always want to go with the bid price. So if I wanted to open this right now the bid is actually at 6. So I would open however many I wanted at 6 cents or whatever the bid is. Sometimes the bid will fluctuate to 5, so you might have to put the order in for 5. But usually you'll get filled at the bid price. If not, then there's just not that many people trading those 407, 408 calls. Any calls for Walmart? Let's see. Do I consider $200 sale all profit for my tracker? Not sure what you're talking about with a $200 sale. If you're talking about the latest trade that I made, let's see. Which I need to log in right quick. The latest PMI report, though. Yes, I will break that down. So what the PMI is it's the Purchasing Managers Index. So basically, it is a gauge of how purchasing managers or just managers in general feel like the economy is going in their respective fields. You have the manufacturing PMI, which is basically the supply chain. And then you have services PMI, which is services, obviously. Restaurant managers, I don't know, movie theater managers, things of that nature, services that people offer versus goods and production with the manufacturing PMI. So with the services PMI coming in at 50.2 or something like that, let's see. I'll go to the economic calendar. With the services PMI coming in higher than expected, basically, that means that there is possibly more services inflation to come. If services managers are thinking that the economy is going to be doing well in their respective fields, that means that they're going to be hiring more people. That means that they think that, their business is going to be doing well over the next year. And if their business is doing well, that means that there's more money that's flowing into services, which overall means more services inflation, basically. That's the way that I think of it. So the expectations was 47.2. The reality was 50.5. So to me, that signals that there's more services inflation to come, which is exactly what the Fed is trying to fight off. But yeah, Walmart, my idea for Walmart, let me log in to my TD. All right, quickly. Well. Well, this is not doing very well. Trying to log into my TD Ameritrade, but this does not want to pull my password for me. Let me move this on the other screen just right quickly. TD. All right. I'm going to pull this over right quick. So many tabs open. Maybe that's why. So slow this morning. Okay. Settings. Passwords. There we go. Now I should be logging in. Really got to clean up my desktop, huh? Yeah, no problem, Fazo. How do I calculate my profit on you, Vixie? The money you put in Vixie versus how much you sold. So that one I don't track in the options tracker. That one just gets logged into the Discord. But I initially bought those shares at, let's see, I think like $6 or $7. I think $7 was the average price. So that one would be a loss because I held them for so long, right? So with the VIXI shares that I own, I got 400 of them. My average cost was $7.19. So $7.19, I sold them at $5.45. So that would be $174 multiplied by the 40 shares that I sold, which would be about a $70 loss. And I think I sold even more previously, another like 20 shares or something like that. I can pull this up here. 50 shares at $5.56. So a little bit higher than it's trading right now. And before that, it was all buy transactions. So as I continue to sell out of it, this will get tallied up, I guess, until I'm all out of shares. But for right now, still thinking that the VIX will go up. And I also have some covered calls on that assumption that it won't go up a lot. $8.50 strike price. But if UVIXI does manage its way up to $8.50, then I would be at a profit for the shares that I bought at $7.19. So that is my kind of hedge, I guess, against VIX going down. But yeah, let's get to that Walmart trade. Because their earnings, I think, is early in the week, if I remember right. I think it's on Tuesday. Is it today? Oh, did they already have their earnings? How did I miss this? That's annoying. All right, so Walmart had their earnings coming in at $1.71 earnings per share versus $1.51 expected. So a huge beat on earnings per share of about 15-20%. So that is definitely a positive for Walmart. And let's see if they gave any forecast. I'm not sure if Walmart would be one to give earnings forecast. I know that Costco refuses to give any earnings forecast, but I'm not sure about Walmart. 7% sales growth, flat margins, dividend boost, cautious outlook. Interesting that they give a cautious outlook. Because with the CEO recently, he gave a warning that they could be closing down stores and increasing prices due to increasing theft, which would actually boost their margins. So I'm not sure why they would give a negative forecast. But that is what the headlines are reading. Definitely a good earnings, though. 171 earnings per share and a 7% sales growth. Let me check in on their revenue, too. Compare that to what was expected. Adjusted earnings per share, $5.90. 605, 171. Okay. And then for revenue, this ended up coming in $164 billion. So if we go over to my Notion page that had our estimates, this was expected to come in at 158 earnings per share, came in at 171, so that was a beat. And then their revenue was expected to come in at 159, and it actually came in at 164. So a double beat earnings revenue. The only thing missing for a really good earnings report would be good guidance. They gave bad guidance, so you're not going to see it rally a shit ton. But considering how much they beat on the revenue and how much they beat on their earnings per share, I do think that you're going to get at least a hold. I would probably say above $144. Let me check the price analysis for Walmart. Revenue beat and an earnings beat. I figured it would go to 150. Not sure about 150 though. Considering the market sell-off this morning, that's going to weigh negatively on Walmart, but I do think that it could probably stay above 145 or 144. Maybe Walmart needs to start charging for shopping bags. Yeah, just pull an Aldi. Honestly, what they should do is they should just Aldi their entire store. Stop playing music. Require people to bring their own bags or buy bags. What else does Aldi do? Make people give a quarter to the shopping carts so they return the damn thing and they don't have people fetching them for them. There's so many things that Walmart could do better to save on their profit margin, but yeah, it's the thefts that's really eating into their profit margin, right? Doubtful, but it is what it is. Corporate greed, gotta love it. But yeah, 145 is what I would expect. So let me see if I can pick up a 145 put credit spread for Walmart at a decent price, considering that they already had their earnings per share or their earnings report. I thought it was coming out later. But considering that they had their earnings report, the value of their options are going to be a lot cheaper, which means that we're not going to get as much credit. And right now, the credit is paying us 20 cents to assume that it'll be above 145 by the end of this week. I think that would be a decent idea. I might actually get a little bit more credit than I want. Well, the bid-ask spread is moving a shit ton on me, so that's going to make this a bit harder. Earnings trades, I never really spend more than about $200 or $300. So this trade, I'm only putting up, let's see, 3 trades or $240 in risk on the trade. So that one I will take. Post it in the trade alerts, new options alert. All right. Just opened a new Walmart put credit spread that expires this Friday, which is the 24th. 224 expiration. And I opened them at 20 each. So, good earnings report, exactly what we expected. The problem with this trade, with the S&P 500 falling today, that could weigh negatively on Walmart. So don't have full confidence in this trade, hence why I only put down $240 in risk for it. Loving the new content. Thank you, H2K. I'm going to get a roll of quarters to go to Alti and scatter every quarter. Oh, that's just evil. That's awful. Aldi also doesn't play any music in their stores, too, so they don't have to pay for the copyright of music, which is really smart. Like, that's not something that I would have thought of. But really, like, why do people need music in a grocery store? I wonder if there's any, like, psychological effects to people spending more money at grocery stores because they have, like, good music playing. Yeah. Aldi is the best. I always shop at Aldi. Personally. And then Giant Eagle, but that's like secondary things that I'll need, or Costco if I need protein. All my protein is from Costco. All right, though. VIX is almost trading at 23, 13% today. Shit, man. The 10-year is at 3.93, bursting up another 0.5% all the way up to a high of 3.95. The dollar index kind of chilling out, I guess, which means that gold should be chill, hopefully. Get the baby food from Costco, too. Let's see. Gold is trading at 171 almost. Yeah, I wonder if Costco has more availability when it comes to formula, because Target has almost zero availability at all times when it comes to formula, which is absolute shit. Any suggestions for starting with $100 and can't qualify for spread options? I would say trading around earnings reports, but obviously you have a lot of risk with that. With an earnings report, you have to find a good opportunity, right? So the problem with trading around earnings reports is that the earnings is almost always already priced in. But you can spot a good opportunity if implied volatility or what's expected in volatility is low. And a way that you can judge that would be IV percentile. So if you have Thinkorswim, this is, I think this is a custom study, so I'd have to link it somehow. But basically the way that this works is this shows you where implied volatility is now relative to the time frame you're looking at. So if I'm looking at the last year for Nvidia, which is having their earnings report this week, the implied volatility percentile is 67. So that means that 33% of the time implied volatility has been higher than where it is right now. So that's not very much. But earlier in the earnings season, there were stocks like, I think Visa, if I remember correctly. They reported early in the season, and their implied volatility percentile was like under 20, right? So that means that implied volatility was extremely low relative to what it had been, which meant that there was a decent opportunity in Visa. And if you traded on their earnings report, the stock went from $220 all the way up to $225 in the next few days, went all the way up to $233. So it was a lot more volatile than what the markets expected out of it. So you would have got a better opportunity than you would if you're trading Nvidia right now, just because implied volatility is relatively high. So you want to find earnings plays that have low implied volatility percentile, and that'll give you a better edge in making a profit if you can only buy calls or buy puts. You could also sell options, but if you're only trading with $100, you're not going to be able to afford much. You'd have to pick a stock that's trading at like $1. So not a lot of availability there. How do I get IV on my chart? It is a custom study. Let me try to post it somewhere. Go to the settings, I think. IV percentile. Let me see if I can find IVP. So this is a custom script. I wonder if I can pull the custom script. I guess I can actually share it, right? Maybe. Never shared a custom script before, so if y'all know how to do it, that would be great. Maybe I can share study set. Load study set, save study set, delete study set. I will just see if I can share my whole workspace, maybe. And that should include it. Not 100% sure though. So try that. Try opening this link with Thinkorswim. In order to open it, go to the setup, open shared item, type in the URL, preview, import, and I hope that IVP should show up for you, but I'm not 100% sure if it will. If not, the way that I found it was just by searching IV percentile Thinkorswim script. And I think this is the link that I found for it. Implied volatility isn't the same as as implied volatility percentile. So you couldn't just use implied volatility. Anyway, let's see. These Bank of America Leaps puts are printing a little bit of money. And Bank of America is down to $34.69, still down $500 for this option. Initially buying them at $7.20. Currently, they're trading at $5.43, and I still think that banks are going to have some trouble by the end of the year, and this is expiring in January of 2025, so I have a shit ton of time on my hand for this trade to work out. My assumption was that they're going to go to a new 52-week low, and they're about, 10% off of it. 34.71 right now, the yearly low. Let me take off the IVP. Too distracting. Remove study. Yearly low was $29.31. So another $5-6 on 35. It's about a 14% drop that I'm still expecting out of Bank of America over probably the next 6 to 12 months, I would guess. Am I doing covered calls for Bank of America? It would be a covered put, I guess. A poor man's covered put. Or a poor man's cash secure put. I don't know what you would call it. But, yeah, if I wanted to, I could sell put options against the 37 put that I bought. But that would also be under the assumption that Bank of America would see a rally. And if it doesn't, then I would take a loss for this 37 put. Right, so if we work through this, I bought this $37 strike price at $720, which means that my break even will be $29.80. So if I wanted to sell a put option, I would need to find a break even of lower than $29.80 in order to make sure that I make a profit out of this. So if I set my expiration date, say 30 days out, and we go all the way down to the $28 strike price on a put option, you're going to get paid a abysmal $5 for that option. So not really worth it. Awesome. That's good, Kamala. Glad that you were able to figure that one out. It was a little bit difficult to try it myself, but glad that I can help y'all. Let's see, the Walmart trade that I opened earlier, currently down by $24. I could have got a lot more credit out of this than I did. I don't think that Walmart has dropped. I think I opened it when it was trading at 147, but getting a little bit more credit out of this, so I could have waited a little bit longer and got like 23 versus the... Oh, I probably got robbed on the bid-ask spread, 19 and 32. Probably should have checked Aries before I made that trade, but it is what it is. Gotta love Robinhood and their bid-ask spread taking away my money. But yeah, I think that's all the trades that I'll make today. Let me make sure that I log that put credit spread that I opened for SPY. My assumption was that it would be above 401. Currently, it's at 402. So we probably might have been able to hold them to the end of the day, but I didn't want to take that risk after seeing what happened with the PMI report. So for me, that is a no-go. So open this today, close it today, SPY put credit, which is a bullish / neutral strategy. Expiration date was today, so it's 0 DDE because we are sophisticated gamblers out here. Chose a 400 strike price, 401. Open 3 of them. Let me double check that. Let me double check. 20, 3 of them at 20. And I closed them at 17. Well, where the hell are they? Yeah, cool. So 20 cents credit, 17 debit, for a profit of whopping $9. So total today, that is January. Let me copy this. Paste another green day in the books. 21st. That is not right. Let me type in the closing date for this too. Call credit spread. And these were both closed on my own. I did not let them expire. So that is a total of $81 in profit today. So average profit loss for each day has been 93. Total of $1,300 profit so far for February. And 1 red day for the month, which pains me, but it is what it is. What size am I working with? Usually each trade is around $300 or less. So I risk about $300 a trade, and I don't open more than about 5 trades at a time. But you know, my account size, my total account size is $30,000, right? $30,700. A lot of this is just in cash, just because I want to be above that $25,000 mark in order to day trade as much as I would like. And then, you know, the rest of it is just put into stocks. So I have Fulgen, Tesla, Uvixi, McDonald's, and shares. But the options portfolio, I would probably say, is less than... Let me see. I can actually pull it up here. %36 of the account with 12,000 holdings. All right. So I've got 30,700. Brokerage holdings is 12,900. I don't know how they break this down. I thought they gave you a breakdown of... There we go. I thought they gave you how much you have in, like, options collateral. Would that be under buying power, I think? Yeah, so options collateral, $300? That doesn't seem right. I would have to tally up the total value of these, maybe. Last price, equity. All right, so 1,000 here, 2,000 here, 13, 256. These are credit spreads, so you'd have to take... Well, I guess this isn't a credit spread. So be 1,600, 2,800. The MAPS call is basically dead at this point. $13. These debit spreads, 264. Oh, I forgot about these debit spreads, actually. 264. The Uvixi shares cost me, let's see, around 1,400. Let's see. The Walmart put credit spread, I only spent 200 in risk, roughly. And then the Nvidia, currently trading at 141. So roughly about $7,000 that I'm using to trade options right now. So a return of, let's see, back to this, $1,300 on 7,000 would be We're at an 18% profit for the month of February so far. Yeah, no problem. How do I determine my actual cash in the account minus the margin that you're using? It'll tell you how much margin available. So it's telling me that I have 1,000 margin available, and I have $17,000 of brokerage cash. I think brokerage cash is both. Let's see. Brokerage cash is your margin and your cash. It's a combined of the two, I believe. Or actually, no, it's not. So brokerage cash is just cash, and then margin available is how much margin you can take out. I never dip into my margin, basically. So really, I don't even need Robinhood Gold at this point and the margin that comes with it. So probably cancel that and save myself $5 a month, but we'll see. But yeah, that's all the trades that I'll make today. Hopefully I'll have a great rest of your Tuesday, and don't let the markets hurt you too bad. Currently down 1.4% for SPY, trading at 401.50. So definitely glad that I got out of that 401-400 put credit spread. And I will see y'all tomorrow at 9:30. Bye, everybody.